Hi there everyone, welcome to the Dynamic Investor Program report for February 2012. This is the video section and to be viewed in conjunction with the written report as well. So just a quick reminder, this is general advice only. We're running a model portfolio here. You're given a lot of guidance, but at the end of the day you've got to make sure that these investments are consistent with what you're trying to achieve. Just a quick overview of where the markets sit. Europe still goes backwards and forwards, and in saying Greece may be close to debt resolution, I'm in no way suggesting that it's problem solved. Clearly it's not. I think problem solved in Europe is 5 years away, possibly 10 years away or more. All I'm saying is that the immediate threat of Greece having to default may be resolved, which just buys some time. But in any case, central banks are really doing everything that they can with pumping liquidity into the system. Both the ECB and the UK Central Bank, the Federal Reserve in America, they're all printing money like crazy, so that's why stock markets have been so relatively buoyant. In America, the buying support in the stock market is really quite immense. We're not really seeing it to the same extent here in our market, but the support really is quite amazing. Every time the market dips, there's a whole lot of buyers come out of the woodwork. Reporting season started about a week and a half ago. It's been less than inspiring this time, and so I really am expecting a bit of a short-term pullback in the US market, but I don't think it'll be very much, and that'll really just create a better buying opportunity for us. And there are now expectations that there'll be some form of QE3 fairly soon, and that will probably target buying up residential mortgages to support the housing market. So it doesn't help in the long term, but it's the political solution at the moment, so that's what they're going to do. Looking at gold now, I believe the low is pretty much confirmed in gold. We'll have a look at those charts in just a minute. Short term, overbought. However, looking for a pullback, maybe somewhere between the 1650s and 1680 area, and then I would see gold as advancing beyond that. It's been really good to see that gold stocks have now joined in the rise as well, both in the US and here, and they've done pretty well in the last couple of weeks. Now, looking at silver. There's resistance at silver at 35, it's about 33.50 at the moment. I would expect to see a bit of a dip off that resistance and then a move back beyond $40 after that. Now, just before I get into the specific stock information or specific investment information, I'll just jump over to the chart, and we'll have a look at those first couple of charts to start with. This is the S&P 500 index on a weekly basis, and you can see that we've had a very, very strong run. This was the big dip that we had in early October. It's been a very strong run since then. We had a bit of a pullback in November. I think we'll probably get a bit of a mild one now. And then I would expect the market to move on, probably push through this 1360 area and head up towards maybe 1440. And then what happens from there will really set the rest of the year up. If the market can push beyond 1440, then I think we're in for a pretty substantial rise. However, if 1440 holds, then we could be back into resuming the bear market. But look, I would expect all that to play out over a period of several months, so we'll have plenty of warning of any of those particular changes. Let's have a look first of all at the gold chart. This is gold on a weekly basis, and we'll just put a trend line on here. So gold still very, very nicely holding that long-term trend line. We've had a significant kick up, as you can see, in the last few weeks, and just zeroing in on the daily chart. So what I'm looking for at the moment is a bit of a pullback in gold looking for it to, let's just put some retracement levels on here. So looking for probably at best maybe 1693, more likely 1660 I think is probably the most likely area, and then I'd see gold pushing up higher and having a crack at the highs that we saw in September last year, which was up around 1900. So all pretty